Hi everyone, welcome to my YouTube channel Learn Commerce with Namita. I am Namita Mane. In today's video, let us solve the example number 2 of income from business. So this is the example on the screen. First we will discuss the example. Okay. So what is given in the example? The following is the profit and loss account for the year ended on 31st March 2023 furnished by Mr. Rohit. Okay. So Mr. Rohit is the owner of the business and he has furnished the following information in the profit and loss account. Okay. So this is the debit side and this is credit side. So let's see what is given in the debit side. So to advertisement 18,000, to fire insurance 8,000, to salary 1,50,000, office expenses 10,000, depreciation 35,000, income tax 17,000, bonus 25,000, GST 9,000, interest on bank loan 11,000, then RDD. Okay, RDD means reserve for bad and doubtful debt, that is 7,000, and net profit 1,98,800. Okay, then to the credit side, gross profit is given, that is 4 lakh rupees by bad debts recovered. Okay, by bad debts recovered, and in bracket it is written that not allowed as deduction earlier. Okay, so income tax has not allowed this bad debt recovery. Okay, so the amount of bad debt recovered bracket not allowed as deduction earlier is 16,800. Then gift from mother 60,000. Last is interest on bank deposit 12,000, and both the side debit and credit tally at 4,88,800. Okay, along with this profit and loss account there are some additional information provided. Okay, so what are those additional information? Additional information number 1 is advertisement includes 1,500. Okay, advertisement includes rupees 1,500 as expenditure incurred on it for selling household furniture. So in the debit side of profit and loss account, advertisement is given 18,000. So an advertisement adjustment is there. So advertisement 18,000 is given. Okay, out of this 18,000 it says that 1,500, okay, it includes 1,500 as expenditure incurred for the selling household furniture. Okay, then is salary. Salary includes 9,000 paid to domestic services. Okay, so salary is given. Salary is 1,50,000. 1,50,000 includes 9,000 salary which is paid for domestic services. Okay, then is third adjustment is allowable amount of depreciation as per income tax rule is 32,000. For on adjustment on depreciation adjustment is there. Depreciation in P&L account is 35,000. As per income tax rule, it depreciation is allowed 32,000. Okay, so there is excess of depreciation. Last adjustment is GST includes rupees 2,500 as penalty for late payment of GST charged by GST authority. Okay, and what is next is what you are required to compute taxable income of Mr. Rohit from business for the assessment year 2023-2024. Okay, so we have to compute the taxable income of Mr. Rohit from business. Okay, so Mr. Rohit is the owner of the business and now we have to compute the taxable income for Mr. Rohit from the business. Okay, so this was the question. Okay, I hope you have understood the question. Now first of all, how to solve this example, like computation of taxable income from business. So in my last lecture I have discussed about the format of computation of taxable income from business. So this is the format. Okay, as per this format we are going to solve we are going to solve this example. Okay, so now prepare the format. So prepare this format. Okay, so give the heading computation of taxable income from business of Mr. Rohit for the assessment year 2023-2024, particulars and to amount column. Clear? Now check the format. What is given? First thing, net profit as per profit and loss account. So net profit is given in the question. Okay, it is given in the debit side of profit and loss account. So to net profit, amount of net profit is how much? 1,98,800. Okay, so write it here. Net profit as per P&L means profit and loss account. Amount is 1,98,800. Okay, so now net profit as per profit and loss account, we have posted the entry, we have passed the entry. The amount is, net profit amount is 1,98,800. Okay, now next is what? Next is add disallowed expenses. I hope you know the meaning of disallowed expenses. Disallowed expenses means the expenses which are not related to the business. Okay, so that will be called as disallowed expenses. So this disallowed expenses you are going to identify from the profit and loss account debit side. Okay, in the debit side you will get the disallowed expenses. Now write here, add disallowed expenses. Now first disallowed expenses. Now what is the advertisement? Okay, advertisement is how much? 18,000. Now this advertisement is related to the business expenditure. Okay, it is related to business, but here there is adjustment on advertisement. What is given? The advertisement, adjustment on advertisement. See, advertisement includes rupees 1,500 as expenditure incurred on it for selling household furniture. Okay, so this is what? Household furniture. That means Mr. Rohit, okay, for his personal use he is using advertisement. Okay, so this 1,500 is not related to the business, hence it is called as disallowed expenses. Okay, so see here in the format household expenses. Now here this advertisement, okay, advertisement expenditure, okay, advertisement 1,500 is used for selling household furniture. So Mr. Rohit is selling his household furniture. Okay, from it is his personal expenses, or you can say it is household expenses. So this 1,500 will be called as disallowed expenses. So first is advertisement in bracket, right, selling of household furniture. $1,500. Clear? 1,500 is a disallowed expenses. Next is fire insurance 8,000. This is related to business. After fire insurance is salary. Salary is what? 1,50,000. Now this salary is related to business. Okay, giving the salary to the workers, giving the salary to the employees who are working in the business. So this salary is paid to them. Now on salary also there is adjustment. Salary adjustment number 2. Salary includes rupees 9,000 paid to domestic services. Okay, domestic service means for his Mr. Rohit has paid salary. Okay, 9,000 for his personal services. Okay, domestic services. So this 9,000 is nothing but disallowed expenses. Why? Because 9,000 is not used for the business purposes. This 9,000 is used for the domestic services for the personal use of Mr. Rohit, who is the owner of the business. Okay, so 9,000 is our disallowed expenses. Second, salary paid to domestic services, 9,000. After salary, office expenses 10,000. Office expenses is related to business expenses. Okay. After office expenses, depreciation. Depreciation is 35,000. Now on depreciation there is adjustment. Adjustment number 3. Allowable amount of depreciation as per income tax rule is 32,000. Okay. In P&L account, depreciation is 35,000 and income tax has allowed depreciation amounted to rupees 32,000 only. So 32,000 and in P&L account 35,000 is there. That means excess of depreciation is there. Okay. So you can see in the format, excess of depreciation means extra is a disallowed expenses. Depreciation in P&L account is given 35,000. Income tax rule is saying that depreciation is allowed 32,000. That means 35,000 minus 32,000. 3,000 is excess of depreciation. So this is excess of depreciation. That means it is disallowed expenses. Third, excess of depreciation $35,000 minus 32,000. Excess is 3,000. Okay, so this 3,000 is not related to business, hence it is disallowed expenses. After disallowed expense, after depreciation, next is income tax. Okay, income tax 17,000. So even income tax is disallowed expenses. Okay, income tax, wealth tax, gift tax, advance or paid advance income tax paid. Okay, so these are all disallowed expenses. So income tax 17,000 is disallowed expenses. Income tax 17,000, we are treating it as disallowed expenses. After income tax, to bonus 25,000. Now bonus is given to the employees in the business, so hence bonus 25,000 is related to the business. Next is to GST 9,000. Now GST is also paid related to the business. Okay, now on GST there is adjustment. Okay, what is the adjustment on GST? GST includes rupees 2,500 as penalty for late payment of GST charged by the GST authority. So GST includes 2500. In 9000, 2500 is included, but this 2500 is included as penalty. Okay, there is a GST penalty. So obviously if it is a GST penalty, it will be called as disallowed expenses. So check the format, disallowed expenses, GST penalty is there. So next will be GST penalty. GST penalty is rupees 2500. 2500. After GST, 2 interest on bank loan 11,000. Now see here, 2 interest on bank loan 11,000. Is there any additional information given on bank loan? Whether in additional information, whether it is saying that this bank loan, okay, this interest on bank loan is related to the business. Okay, so there is no such information given related to the bank loan. Okay, so now we will consider this interest on bank loan 11,000 as the personal loan of Mr. Rohit. Okay, if there is some information given that bank loan is used for business purpose, then we will not take this as disallowed expenses. Now here there is no information provided, hence we are taking this interest on bank loan 11,000 as disallowed expenses. Interest on bank loan. Interest on bank loan amount is 11,000. After interest on bank loan 11,000, next is 2 RDD. Okay, the full form of RDD is what? Reserve for bad and doubtful debt, that is 7,000. So any type of reserves, any types of provision is called as disallowed expenses. Okay, see here the format, provision and reserve. So RDD is reserve, so it is disallowed expenses. RDD 7,000. Okay, next is to net profit. We have taken the net profit already. So all the debit side, okay, is completed. Now hence then all the disallowed expenses we have taken into the consideration. Now add all this disallowed expenses like 1,500 plus 9,000 plus 3,000 plus 17,000 plus 2,500 plus 11,000 plus 7,000. So total we will get 51,000. Okay, so total of disallowed expenses is 51,000. So add this 51,000 in net profit. Okay, net profit is how much? 1,98,800. So 1,98,800 plus 51,000, we get 2,49,800. Okay, after this, okay, now after all this adding disallowed expenses in net profit, we have to less what? Less expenses or losses allowed but not debited to profit and loss account. Okay, this means what? Expenses or losses allowed as business, okay, but it is not shown in the debit side of profit and loss account. So if the expenses and losses, okay, which are allowed as per the business, if it is not shown in the debit side, okay, but it is showed in the additional information, or it will be shown in the adjustment. So if the expenses or losses are showed in the adjustment, we have to reduce them. Okay, we have to deduct from the net profit and disallowed expenses. Clear? Now check the expenses. Advertisement, it is already given in the profit and loss account in the debit side. Then salaries is also given in the debit side. Then depreciation and GST is given in the debit side. So there is nothing, there is no expenses or losses allowed but not debited in the P&L account. Now after this, what is next? Less income from taxable as business income but credited to profit and loss account. So what is this? Income not taxable as business income but credited to P&L account. This means what? The income which are not related to the business but still it is shown in the credit side of the profit and loss account. Those income we have to deduct it from the net profit and disallowed expenses. So less income not taxable as business income but credited to profit and loss account. Now from where we will get this type of income? We will get this income from the credit side of profit and loss account. So we have to identify the income which are not related to the business but still it is shown in the profit and loss account. Now see here, by gross profit 4 lakh. Now gross profit is related to the business income. Okay. After this, after gross profit is what? By bad debts recovered. Okay. By bad debts recovered, and in bracket this is very important. Okay. Not allowed as deduction earlier. Okay. Not allowed as deduction. That means this bad debts recovered income is not related to the business. Okay. But still it is shown in the credit side. So we have to reduce it. We have to deduct it. See the format. Bad debts recovered, not allowed as deduction. So it is what? Income not taxable as business income, and it is shown in the profit and loss account. So it will be, first will be bad debts recovered, bracket, in bracket write not allowed as deduction. Amount of bad debts recovered is what? 16,800. 16,800. After bad debts recovered is what? By gift from mother, 60,000. Now mother is what? Personal, relative. Okay, so gifts is not related to business. Okay, so it is what? Personal. So gift by mother is not related to the business income. See the format. Gifts, any type of gifts are not related to business. Second, gift from mother, amount is 60,000. After that, by interest on bank deposit. Okay, by interest on bank deposit 12,000. See what is there? Interest on bank deposit. So here in the format it is any type of interest, whether it is a fixed deposit, whether it is a any type of deposit. So that is not income but not taxable as income but not considered as business income. Okay, so this interest on bank deposit is a personal interest which Mr. Rohit is getting. It is not related to the business. Next will be interest on bank deposits, 12,000. Okay, now after this was last, okay, interest on bank deposit. So all the particulars in the credit side is over, okay. Debit side, credit side we have taken into the consideration. Now additional information we have also solved it. So now add the bad debts amount 16,800, 60,000 plus 12,000, we get 88,800. Okay, so total of this three income, that is bad debts recovered, gift from mother, interest on bank deposit, total is 88,800. Clear? Now how to compute the taxable income from business. So less this two amount, okay, that is what, 2,49,800. From where we got this 2,49,800? By adding 51,000 with 1,98,800. So the total of these two things, okay, total of this two things comes what, 2,49,800. So 2,49,800 minus total of this we got 88,800. So 2,49,800 minus 88,800. So we get 1,61,000. Okay, 1,61,000 is our taxable income from business. Okay, so taxable income from business is 1,61,000. So in this way you have to compute the taxable income from business. Okay, so I hope you have understood today's session. Please subscribe my YouTube channel, like and share the video, and do not forget to press the bell icon to get the latest notification.